Of course, there are risks that we'll get a second wind in inflation if consumer spending surprises because of those tax cuts that will start from the 1st of July, and if we get an escalation in Middle East tensions. But I think that the outlook for inflation is firmly down from here.
Alan, economists will get a much clearer picture this Wednesday of how inflation is weighing on the economy. What do you expect from the quarterly CPI?
We expect about 0.8, which would mean that the through-the-year growth rate is 4.2. And to give some sort of context, in September quarter it was 5.2. So we think it's coming down quite a lot. And everything, just like Diana, in our data, says inflation continues to come down. And we expect by the end of this year, you're probably down to something like 3.1%.
Diana, do your expectations align with Alan's?
For the December quarter, yes, and I think that on the December monthly figures, we'll actually see inflation somewhere at about 3.3% over the year. And as we look through into this year, I think that by the end of the year, we'll have inflation within that 2 to 3% target band, both in headline and in trim mean terms, which I think will really give the RBA room to start cutting interest rates. And we see interest rate cuts starting from about June of this year.
Alan, the RBA will hold its first meeting next week. Until recently, you were still forecasting another rate rise. How soon are you now expecting a rate cut?
We think the RBA is going to be on hold for a long time, so we've got the first cut around about November, and we're not really expecting to see a lot of difference in the outlook, basically because as interest rates come down, they need to cut them, and so real interest rates for us stay broadly unchanged over the course of the next year or so.
Where do you expect rates will end up at the end of 2024?
By the end of 24, we would have rates somewhere around 3.5% and gradually down to about 3% by the end of 25.
And Diana?
Well, we see interest rates being a bit lower than where Alan's forecasts are, about 4 rate cuts this year, so ending the year at about 3.35 or so. That's our estimate of probably where neutral is, the neutral interest rate in Australia. But if we go into a recession, then it could be very easy for the RBA to even cut interest rates 6 to 8 times by the end of this year, but that's if we go into that deep downturn.
Diana, were you surprised to see the IMF's recent call on the RBA to increase rates to make sure inflation does come down to the central bank's target before 2026?
Well, I was surprised because we don't usually see the international organisations start debating on individual central banks' meetings, and I don't really think that they should be necessarily involved in those decisions. And also, it's quite a difference from where the money markets are forecasting the RBA to go. The money markets are pricing in rate cuts this year rather than rate hikes. So I don't necessarily think that the IMF is correct in its outlook for now.
Alan, could Australia find itself in recession in 2024?
I think the short answer is no. We're expecting very, very little growth, something like a 0.5 over the first half of this year, and then something maybe like 1.5 over the course of the whole year. And on the IMF, I should also say that when we were talking to them, they were basically finalising their report in September. So remember, they've had another rate rise, and very much like Diana, I don't think it's the IMF place to tell everyone where rates are going, but essentially what they were saying has already happened, although the sort of reports came out post the RBA's increase in November.
Diana, what chance do you put the risk of recession here in Australia this year?
I'd probably put it to 40 or 50%, and the risk is really that it happens in the first 6 months of this year because that's when we see growth being the weakest. We also see home prices declining by up to about 5% across the country, and also that's when we see the unemployment rate rising. In 2023, consumer spending held up better than we thought, ultimately because the labour market was still so strong, so consumers continued to get those earnings which boosted their household incomes. But we think the unemployment rate's headed to about 4.5% by the middle of this year, which will really put further strain on consumers at a time when interest rates have already risen by so much. So that is really the key to our outlook, whether consumer spending falls enough to generate that recession.
And so finally, a brief question to you both. Alan, to you first. Is this year going to feel better or worse for the average Australian than last?
the first half of this year, I think it's going to feel just as bad. And the second half of this year, I think it will improve a little bit.
Deanna?
I do tend to agree. I mean, the first half will feel tougher because while inflation's coming down, the unemployment rate's likely to go up, and that's more of a strain on consumers than high inflation. But the second half of the year, we should see those rate cuts and those tax cuts really support consumers.
Deanna Mousina and Alan Oster, terrific to speak to you both. Thank you.
Thank you.